What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's video is going to be very short, and we're going to be looking at shorter time frames. Why? Not much happened in the markets today, so I'm just going to reiterate some key levels. If you haven't watched yesterday's video, you can go back and watch that where I go into a little bit more detail. Another reason why I'm not going into too much detail is tomorrow is the quarter end, so I plan on tomorrow's video being a little bit more in depth with some quarterly charts. With all that said, let's go ahead and hop in to today's episode. All right, everybody. Welcome back. We're going to look at the market dashboard. Before I hop into here, if you don't follow me on Twitter, you can follow me there or on my other social. I posted a tweet earlier this morning about banks, big banks and big leverage, and I drew out some of the charts. I'm going to be talking more about those tomorrow, but I do find it interesting with this whole unwind of the hedge fund taking place and, just that whole blow up situation, which is causing ripple effects in the market as we've seen with various stocks. And we don't really know to the extent of, what other hedge funds might end up having to do the same thing. And we don't also know the pain that some of these banks are going to be having to go through doing these margin calls. So I find it very interesting that the patterns that I posted on my Twitter, they're all these rising wedges, which are not the most bullish type patterns, and they're still putting in lower highs at this particular point in time. And, if equities go, or if these banks roll over, that can just send even more ripple effects in various other sectors and various other stocks. So I just wanted to kind of keep that front of mind. You can see here, though, financials today was one of the leaders, same with consumer discretionary. And then at the bottom was tech and consumer staples. Now, I want to call out something here on the VIX so we can go into tomorrow, but we have a slight gap below us, and it's right at an area of support. So what happens when the VIX closes this gap? If it closes this gap and comes to this area of support, it's very likely that we bounce from this area, which means the S&P 500 very well may go down, because once we start heading up, it's very likely to see the S&P 500 move down. Now, across the board today, when we looked at the various indices here, the S&P 500, NASDAQ, they were all down on the day other than the NYSE, but the VIX was down too, so that's quite interesting. Typically, you get moves to the upside, but it was just a chop fest overall. So going into tomorrow, I want you to pay close attention to this gap and see if we can get it filled. If we get it filled, then you might want to be a little bit hesitant as far as where we stand on the price action of various stocks, because it is very possible that we start ramping up from that area. So just keep that in the back pocket. And you want to also want to note, that we are kind of coming into this oversold area here on the RSI. And when we get in the oversold areas in the RSI, you can see here we ramped up right here. We chopped around and then ramped up too as well. Right here, we chopped around and ramped up. So just keep in mind, if we do close that gap, it's not only going to act as support from a technical perspective, both the gap and this previous area right here, but then also the RSI would be oversold as well if we get that fill. And then we have also, just take note, we have a couple gaps above us too as well. And if those get filled, those could very well potentially set us up for some good long positions on the S&P 500. Now, when I look at the SPX on the 30-minute time frame, there's a couple little things I want to call out. First off, the bears did not gain traction of the 39.50 level. So you can see here we've been tagging it pretty much all day and then ramped up right there at the end. If that gives way, I think that the easiest target, in my opinion, would be this gap fill to this potential trend line. So right within this 3,900 to 3,920 kind of pocket in here, and then we could potentially bounce from that level. Now, if we start breaking out to all-time highs, that can easily set us up to go to hit 4,000. It's only 20 points away from that. We have that gap fill ahead of us, and then also this gap this gap ahead of us and this area of resistance. So just be careful. I would play either a breakout and just be mindful. It could be a false breakout. It's been so choppy. Or I'd wait for a potential pull back into this area. You need to be very specific. It's a shorter week, and you don't want to get caught into any one trade. And I'm just not really seeing the greatest of setups at this particular time. They do exist, but I'm just not seeing them right here on the indices. On the Dow Jones Industrial Average, very similar type look. We have this resistance above us at 33,200. If we get above that, we might experience more of a press to the upside. So keep that in mind. We can always get above it, maybe even gap above it overnight, come to back test it. Once resistance is broken, it then can become a level of support. So watch for the potential for a back test, and then you might be able to buy into that. making for a good risk versus reward trade. If we cracked down through this support right at 33,000, I'd say this little pink box right here at a 32,800 would act as an area of support. And then at that point, if it's a full breakdown, we might come down into here and then back test this. Once support is broken, it then becomes a resistance, and then maybe head lower or just recapture it altogether. The reason why I say 32,800 is if you just look to the left of the chart, it was resistance, 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 and when we broke above it, we haven't really back tested other than right here. Slightly. It was more just kind of going sideways within this channel. So this resistance can very well act as a level of support. So kind of look at, 32,800. I could have drawn this a little bit lower to around 32,700 as far as a potential opportunity to go long with. Now, just mind you, these are risk versus reward setups. Now, if we break down fully, you see this rising wedge. We did break down. We came slightly, tried to back test it, and then fell lower. And if you follow me on Twitter, I called this out where it looked like it looked pretty bearish. And if we got below that 3950, or sorry, not 3950, 33,000, then it'd be easy to go tag this area. However, I also called out the possibility of it being a bullish rising or falling wedge right here on this breakdown. And then guess what? We broke out of it and came up, and that was actually 33,200 would have been the target for that little falling wedge breakout. So we'll see here what takes place. As far as the Qs go, we have resistance, this diagonal trend line right here that's acting as resistance. If we break above that, it's very likely that we can come all the way to retest the previous swing high up in here, right around 323. If we break down, I think that there's a strong possibility that we still come to fill this big gap right below us. We are putting in, just pay attention to the trend, a high, a lower high, and a lower high right here. So in order to change this, we need to get above this area of resistance. Now, this area of resistance, we have this gap and we have this trend right here. There's a lot of confluence right up in this area, right around 317. So just be mindful that you want confirmations of a break before just kind of entering in long right before then, and then to get rejected and rolled over. So just be mindful of that. Then we got the Russell 2000. This could be potentially an ascending triangle happening where it's somewhat of a bottoming pattern. We need to get above 221 though, and then once we get there, we can potentially come fill this gap. If this breaks out of this 221, this could easily, send us to at least this previous swing high, so right around 230 as a target. If this support trend breaks, it's very likely to go retest this 208 level. You can see one here, one test here, so it's a double bottom, could result in a triple bottom, and then this right here would then potentially have the possibility of becoming a dead cat bounce, where you see it bounce up, get rejected, and move lower. And you just got to watch the trend, right? The trend right now, we're putting in lower highs, lower lows, so that's pretty bearish, but in the short term, we finally got a swing high right here, so a higher low. So that is a good sign, but we got to keep continuing that momentum. And if we get above 221, that's when I'd be feeling a little bit more confident that we can see some more strength coming back into IWM. And also take note that the financials make up a large percentage of the IWM. So if we start to see financials break down and that they make up 20% of the holdings for IWM, just be very careful with the Russell 2000 here. Here is what just happened? There we go. Okay, the dollar. The dollar has been seeing a lot of strength, and we are not really seeing the S&P 500 or various indices actually interact much differently. So I'm actually quite shocked to see this dollar this is a forceful move. That is a very strong move. It looks like it broke out of a bull flag, and it looks like it's clear skies to come retest this 94 level. So we'll see here what takes place. You can see as this has been moving up though, the S&P 500 really hasn't gone anywhere since the 15th. All right, so this could very well be a double top. I wanted to call out this little small rising wedge pattern. So if this continues to scream higher, there's going to be a point at which it looks too much like a risk-off move, and this could very well easily break down to retest even as low right here as 3750. This previous low, this swing low right here. So keep an eye out for that, but it doesn't seem like the market's reacting all too much at this particular point in time. And even on top of that, they're not really responding too much to yields, which we'll get into here soon. Both silver and gold getting completely just destroyed. This is still holding a technical pattern, so it is the falling wedge, which is bullish, but we did get below the 200 period moving average. Not the greatest sign, and not the greatest sign over here on the price percent oscillator either. So this is just looking weaker by the day. Now, what is interesting is silver's getting weaker and gold's getting weaker with the strength of the dollar, but it seems like nothing else is being affected at this particular point in time, which is a little concerning to me, not necessarily just because gold and silver are falling, but when something happens, or if something happens, it could be very, very abrupt. And when I look at gold's like it just a high here, a lower high, a lower high, a lower high, and it's just rolling itself over. Looks like a perfect dead cat bounce. And the price percent oscillator is looking like it's going to do a bearish crossover below zero, which is even more bearish. However, we do get a low here right around 1650. That means we have a low here, a lower low, but the RSI actually might be a positive divergence, which could be a good sign, but that could, would have to hold. That can easily go deeper into oversold territory. So we'll be mindful of that. We'll watch that as it plays out. But right now, I don't see a good entry at this particular point in time, but I will show some longer-term charts here in the near future of where my next kind of purchase opportunity is with gold, because I am still long-term bullish. Here's Bitcoin. Bitcoin's still struggling right around this area of resistance. It looks like it wants to break out. Let's get that confirmation to the upside before anything, really, because this can turn fast. And, back to the dollar chart, we talked about, when the dollar broke down through 92 to the downside, that really benefited equities, it benefited Bitcoin, etc. However, it's not seeming to be phased with the dollar breaking up through the breaking out of the bull flag, And it just kind of makes me wonder here, is it just a temporary thing until the market reacts or responds? It's a possibility, but it's also the slight possibility that it's not. We still have all of that script going on around seasonality in April. So everyone's kind of eyes are set on, a strong April, but keep in mind that 2011 script, that 2012 script where we get those pull downs in April. So we're just getting all these curveballs, some very weird price action overall. The yields, you can see that the yields pressed a little bit higher. The 30-year came down just slightly, but they're holding high levels. And I forget if it was Bank of America or another big bank. They said, maybe we might start seeing issues if the 10-year here comes up to around 1.8. Well, we're basically right there. So it's going to be interesting to see what's going to take place if it really does reach in these levels, as we stated previously. They are getting quite frothy, as we've seen on various other charts. So, it's just an interesting time to be in the markets. And if you follow me, like I said, on Twitter, you'll probably notice some of my earlier trades. I haven't posted a video because my trades have just been really, quite honestly, not going anywhere for me. Today I made $50, and I posted a quick snippet of that. It was the full thing, but I fast forwarded it on my TikTok just so I can show you me making the $50 on that trade. But leading up to that, I took about 3 or 4 trades, and they were dead even trades for the most part, because it's just been this choppy weather. So I wanted to just kind of reiterate this in my conclusion right now, which is my conclusion. I didn't put up the conclusion slide. But I want to reiterate that these environments, they're very, very frustrating for traders, for investors, because the price is not, it's either, one, not really going anywhere, meaning that, we're trying to get a breakout, it doesn't break out, or if it breaks out, you get a whipsaw right back. That is just the name of the game right now. So you have to be patient. I'm trying to be as patient as I can. It's almost comical, a lot of these trades that I get into, and then they just whipsaw me right back as soon as I start getting into the green. But an important note on that is make sure that you focus on the only thing that you do have control of. And what do you have control of? You have complete control of what you risk in these markets. All right. So if you feel stress or anxiety in any one particular trade, and that hurts you to get whipsawed back and forth, then chances are your position size is just a little too large. And you should probably reduce it and then extend your stop losses if you don't want to be, eyes on the computer. However, like me personally, my position size has been significantly smaller than usual, and my stops have been significantly tighter than usual for the most part. and I'm just trying to struggle to get some sort of momentum. Now, that's my personal tactic as of right now, and I know that this patience will eventually pay off when we do get some sort of momentum where we can get a breakout trade that actually follows through, or a breakdown trade that actually follows through. So, like I said, short video today. That's all I got for you. Be careful out there, and I'll see you back here on tomorrow's Daily Stock Market Brief.